And then Joe asks, how do you identify a fake breakout? So clearly you're just looking for that break of structure, not the break of structure, but the break of the trend line.
Yeah.
So what is it that you're looking for that says this isn't just a wick?
So especially on the lower time frames, I just need some added confirmation to get me into trades. So it could be waiting for the retest. It could be waiting for candle closure. So I'm going to say those help me avoid fakeouts in the lower time frames. In the higher time frames, I don't necessarily avoid them. I just am able to manage my risk in case it does happen. So I always have the safety line, the opposing trend line that's going to keep me safe. So if this is a fake out, I already know how much I'm going to lose in this trade, but it's a little bit easier to avoid the fake outs in the lower time frames because you have time to wait for some added confirmation. So to wait for the retest, maybe you got to wait 20 more minutes for a retest, or maybe you simply are in the 5-minute time frame and you just have to wait for the candle to close. So that's just another 5 minutes. So on the lower time frames, it's easier to avoid the fake outs or just wait for more confirmation before entry. On the higher time frames, it's just a waiting game. If you've got a big body candle breaking through a trend line and that's signaling an entry for me, I'm going to get in. But there is the possibility that this doesn't work out, that it starts turning around and it truly was just a wick. It was just a fake out. But as long as I have my risk mitigated and I've got my stop loss on the other side of my safety line, which is the trend it's supposed to be following along, then that's just the name of the game.